Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden financial stories that big companies try to keep under. Perhaps are we about to witness a major correction or a quiet correction of a past mistake? Well, strap in folks, because today we are diving into an amended filing from Empery Digital Incorporated EMPD. This isn't their regular quarterly report, it's an amendment to a previous filing, and it seems like a classic case of oops, we misspoke. The main reason for this update is to correct a big announcement they made. They apparently jumped the gun and said they had finalized a significant financial deal, when in fact that deal was not quite done yet. So what was this big deal that they had to correct? It's all about something called a repo facility. Think of it like a short-term loan where the company exchanges securities it owns for cash with an agreement to buy them back later. In this case, Empery Digital is partnering with Neidig Funding LLC. They agreed to enter into a master repurchase agreement, often called an MRA, and some extra paperwork that together creates this repo facility. This facility is intended to bring in $50 million. Now here is where it gets really interesting. They are using Bitcoin as the security to back this loan. So essentially, they are getting $50 million in cash in exchange for some of their Bitcoin with a plan to buy it back later. The repo facility itself is set to wrap up or close around September 26th of this year, and it comes with an 8.5% interest rate annually. The initial end date for this deal is August 31st, 2026, and if they decide to pay it back early, there might be a fee involved depending on when they do it. Like most of these big financial agreements, the repo facility is packed with conditions. There will be promises from the company called representations and warranties. There will be rules about what the company can or cannot do, known as covenants, and specific requirements that must be met before the money is actually handed over. These are important because they set the boundaries for the deal and protect both sides. What's also notable is that Empery Digital will need to put up more Bitcoin as collateral to make sure the loan is safe. This means if the price of Bitcoin fluctuates a lot, they might need to add more or less Bitcoin to keep the deal on track. The good news is that Neidig Funding LLC, the lender, has apparently started working on fulfilling their part of the deal. They have told Empery Digital that they are moving forward with the necessary steps to get the funding ready. This is a crucial step because the entire repo facility is dependent on this funding actually happening. Just to give you some background, Empery Digital Incorporated, or EMPD, is traded on the Nasdaq stock exchange. They are a relatively young company classified as an emerging growth company. This means they get to follow some different rules for reporting and financial standards, which can sometimes offer more flexibility. This amendment was signed off by Greg Endo, the Chief Financial Officer, on September 19th, 2025. This filing is essentially an update to correct a previous report where they mistakenly said the repo facility was already signed and sealed. The real situation is that they have agreed to enter into it and are working towards the actual closing. So what does this all mean for Empery Digital? On one hand, securing a $50 million credit line, especially one backed by a volatile asset like Bitcoin, shows ambition and a need for capital. It suggests they are looking to grow and need funds to do it. The interest rate of 8.5% is pretty standard for this type of financing, and the loan term until August 2026 is typical. However, the initial misreporting is a bit of a red flag for transparency. While corrections happen and we understand that making a mistake about a significant $50 million deal and announcing it prematurely can raise questions about internal controls, or the eagerness to put out positive news quickly, it's important for companies, especially up-and-coming ones, to be precise in their communications. Being an emerging growth company means they are still building their track record with investors, and maintaining trust through accurate reporting is paramount. The reliance on Bitcoin as collateral is also a double-edged sword. If Bitcoin's price surges, the value of their collateral increases without them needing to tie up more cash. But if Bitcoin's price plummets, Empery Digital might have to quickly come up with more collateral or face issues with the loan agreement. This highlights a significant risk tied to their financing strategy, which is directly linked to crypto market movements. The market's reaction to this news will likely depend on how confident investors are in the company's ability to manage these fluctuating collateral requirements, and the overall stability of the Bitcoin market as we move towards the closing date. In conclusion, Empery Digital is making moves to secure significant funding. The correction in their filing points to a less than perfect execution in their communication, but the underlying financial agreement itself appears to be moving forward. The key for investors will be to watch the actual closing of this repo facility and how the company manages its Bitcoin collateral in the coming months. Will this $50 million boost help them achieve their growth objectives, or will the volatility of their collateral create unforeseen challenges? This is one to keep an eye on. Alright, that is our deep dive into Empery Digital's amended filing. What is your take on this situation? Will this funding move the needle for EMP? Or are there too many risks involved? Drop your thoughts in the comments below. If you found this breakdown helpful, make sure to hit that like button and subscribe for more corporate financial insights. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and we will see you in the next Decode.